Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Today, we are really going to get into the recent tidal shifts happening in the global digital asset space.
A huge moment, for sure.
Yeah, we're looking at all the movements and decisions clustered right around early December 2025. And it's a fascinating mix of institutional posturing, foundational tech upgrades, and some pretty big legislative game changers.
It really is. It's a moment where you have this high-level corporate sentiment, and it's kind of clashing with the on-the-ground technical reality. I mean, on the surface, prices have pumped up quite a bit compared to October and November.
Oh, for sure. Indicating some confidence.
Right, but when you actually look at the fundamental metrics, the overall market sentiment index, it still technically registers as fear.
And that's that classic crypto conflict, right? Money's moving, but the emotional climate hasn't quite caught up yet. That fear number, it's been stuck around 27 for a while, is finally starting to creep up.
Creeping toward neutral.
Exactly. It's signaling this thawing of psychological risk, even if it hasn't translated into, widespread euphoria yet.
And that psychological shift is being fed by some really powerful macro signals. We have important economic data points coming up fast.
The inflation data.
Yeah, the latest CPI or CPR data, and of course the Federal Open Market Committee meeting, the FMC, where they make the interest rate decisions. Analysts are expecting results from both that could be very favorable for risk assets like Bitcoin.
Providing a runway for higher prices.
That's the bet.
So our mission today is to cut through that tension. We're going to unpack the most contradictory quote of the year, Larry Fink calling Bitcoin an asset of fear, and then connect that to some really aggressive but, fundamentally positive regulatory moves happening in the US and the UK.
And then we have to get into the tech. Ethereum's engine room, The Fusaka upgrade.
The 17th major upgrade. Okay, let's unpack this. So let's start with the institutional giants, the ones who drive, trillions in capital. At the New York Times Dealbook Summit, you had BlackRock CEO and Chairman Larry Fink on stage.
Right next to Brian Armstrong, the CEO of Coinbase.
And Fink drops this soundbite that just becomes instant global news.
He called Bitcoin, and I'm quoting here, asset of fear. And when you first hear that, it sounds like he's just dismissing it, right? Like it's some volatile, speculative, panic-driven thing.
Yeah, but that's not the full story.
Not at all. If you drill down into his full remarks, the context is actually way more complex and, I'd argue, ultimately bullish.
That's where it gets really interesting, because he wasn't just calling it risky. He was actually framing it as a hedge against global uncertainty.
Geopolitical risks, currency devaluation.
Exactly. He's saying that's why capital flows into it during times of stress. And then he follows that up by admitting his own view on crypto has softened dramatically over the last 8 years.
And he confirms that Bitcoin is, quote, definitely here to stay for the long term.
Which is a critical distinction.
It is. Fink's letters to global CEOs, they set the tone for institutional thinking worldwide. So when a figure of that magnitude moves from skepticism to seeing an asset as a permanent fixture, even a volatile one, it just changes the institutional calculus entirely.
So he's essentially saying, short term, it's risky, but long term.
It's necessary in the grand scheme of the global financial architecture. Yeah.
And even with all this cautious language, BlackRock is still all in. I mean, we saw $2.3 billion in outflows from their Bitcoin ETF in November, which sounds huge.
That sounds massive.
But Fink is still optimistic. He seems to be viewing those outflows as more like institutional profit-taking, not a loss of faith.
Exactly. The big players are looking past those temporary blips. They're positioning themselves based on what they think is going to happen with the CPI data and the Fed's next meeting. They're playing the long game.
Speaking of ETFs, the capital flows right now are, well, they're a fascinating puzzle. The total inflows are positive, about $77.3 million.
But the composition of that money, that tells a whole other story about rotation and risk appetite.
It's a total inversion. The giants, Bitcoin and Ethereum, are leaking money. Bitcoin ETFs saw $57.1 million in outflows.
And Ethereum ETFs were down nearly $10 million.
Yet the total is positive, and that's because capital is just flooding into some of the alternative assets. Solana ETFs pulled in over $50 million.
And XRP ETFs, they led the entire pack with a staggering $83.6 million in inflows.
That is an eye-catching number. But does the underlying utility of XRP really justify that kind of sudden institutional interest? I mean, doesn't money moving out of BTC and ETH just signal that investors are chasing the newest narrative?
That's the core question, isn't it? It suggests a couple of things. One, investors are diversifying their crypto exposure beyond just the top two. They're looking for higher beta plays.
And two,
And B, a portion of that flow is definitely speculative rotation.
Yeah.
You have institutional desks that are willing to take bigger risks on narratives like, XRP's ongoing legal clarity or Solana's impressive scaling speed.
So it signals a hunger for growth that traditional assets just aren't providing.
Precisely. Meanwhile, while the flow is chasing risk, U.S. regulators are focused squarely on mitigating it. The SEC is moving aggressively to strengthen controls, specifically targeting high-leverage products.
They sent out some very stern warning letters.
To any ETF company trying to launch a crypto ETF with more than 2x leverage, it effectively blocks any plans for those 3x to 5x leveraged crypto ETFs in the U.S. This is all about investor protection.
They cited rules that limit how much risk a fund can take on, which prevents the kinds of products that could lead to, mass liquidations and market instability.
It's a very clear move to reduce excessive leverage risk in the U.S. financial system. And this is where we see that perfect global contrast.
Because while the SEC is focused on limiting risk,
The UK has focused on legitimizing the asset itself through property rights.
right, the UK officially recognized cryptocurrencies as a new type of property under the Property Digital Assets Act 2025. This isn't just bureaucratic language. This is a foundational legal shift.
It's monumental.
Yeah.
I mean, think about traditional property, a car, a house, money in your bank. They all have a clear legal standing.
Right, about who owns them, how they're inherited, what happens in a bankruptcy.
All of that. And now digital assets like Bitcoin, stablecoins, NFTs, they have the same clear legal protection and ownership rights.
So what's the practical implication of that for you, the user, or an institution?
Well, it helps prevent these incredibly complex cases involving theft, fraud, and estate planning. But crucially, by giving digital assets the same legal recognition as traditional property, the UK instantly becomes a far, far more attractive global crypto hub.
It just opens the door for much more sophisticated financial products.
Absolutely, like using tokenized assets as collateral for institutional lending, all because that chain of ownership is now legally ironclad.
So if we agree that digital assets are now legally recognized property, we have to look at the engine powering that property. Let's shift our focus to the tech backbone, Ethereum. The Fusaka upgrade, its 17th major protocol update, is now live.
And this is foundational plumbing. Fusaka is all about continuing Ethereum's long-term scaling roadmap, what they call the search. It's entirely focused on back-end scalability and efficiency.
Which is essential because the network has to support all those rapidly growing Layer 2 solutions.
It has to. And the ultimate goal for the user is simple.
Speed and cost reduction.
Precisely. Make transactions faster and drastically cheaper. It does this by fitting way more transaction data into each block while, and this is key, maintaining Ethereum's rock-solid security. It's the only way the network can sustain what's coming.
Okay, so let's unpack the key technical improvements simply. They rely on these new Ethereum improvement proposals, EIPs, first one, PDS, or EIP 7594.
PDS stands for peer-to-peer data storage. This is probably the biggest user benefit. It lets nodes store what's called blob data. It's this dedicated, cheaper, temporary data storage space and spread that data across the network efficiently.
Think of it like adding a dedicated high-speed cargo lane to the Ethereum highway.
That's a great analogy, an HOV lane, yeah.
So what does that cargo lane do?
It massively increases the data handling capacity for Layer 2s. We're talking more than 8 times the previous capacity. And Layer 2s are where most user transactions actually happen. So if you make their data storage 8 times cheaper and bigger,
you immediately see transaction costs just plummet for the end user.
Instantly.
Okay. Next, they optimize gas limits with EIP 7935 and EIP 7825. What's the function there?
So they raise the overall block gas limits, which means more transactions can fit into a single block. But the crucial safety check is that they also limited the gas usage per single transaction.
So using your highway analogy, they added more lanes, but limited the size of any one vehicle allowed in those lanes.
Perfect. This prevents a single massive transaction or, an attack from just congesting the entire network and grinding it to a halt.
And the final piece, passkey support, EIP 7951. This is the one that directly addresses the security and usability nightmare that has plagued crypto forever.
It is the first true step toward ending the biggest hurdle for new users, the dreaded seed phrase.
Ugh, the seed phrase.
Yeah. Passkey support enables device-based signing. So you can interact with your wallet using the secure chip that's already built into your phone, replacing the need to memorize or hide a 12 or 24-word string.
It makes wallets just inherently more secure and easier to use.
Much easier.
And the market certainly understood what was happening. Immediately after the upgrade went live, Ethereum's price pumped pretty significantly. It reached $3,230, which was up over 6% in 24 hours. Okay, let's circle back to Larry Fink for a moment, because he didn't just talk about Bitcoin. He singled out tokenization as the next massive narrative for the financial world.
Yeah, and he wasn't focused on, making pretty JPEGs into NFTs. He was focused on applying this tech to legacy corporate governance.
How so?
Fink believes tokenization can radically democratize voting rights for shareholders. By tokenizing ownership, every single shareholder, no matter how small their stake is, can easily and transparently vote. It's a huge efficiency and transparency upgrade for corporate democracy.
That focus on applying blockchain efficiency to legacy systems is exactly why real-world assets, RWA, are booming right now.
They really are. And according to the latest market cap data, the new RWA king is Figure Hello, or HELOC.
It's shot past established players like Chainlink.
By a lot. It's leading the RWA pack with a market cap of $14.37 billion. That's more than 50% larger than Chainlink's RWA offerings.
So why Figure Hello? What's the core mechanism that's allowed it to just dominate the RWA space so quickly?
Well, it's not just tokenizing debt. It's revolutionizing the entire life cycle of the loan itself. So Figure provides home equity line of credit, HELOC, loans. The key is that they use the provenance blockchain for the whole process.
The entire process.
From the initial application and verification all the way through funding, servicing the loan, and then finally selling that loan to institutional investors. The loan itself is tokenized into a digital asset on the provenance blockchain.
Representing ownership of the debt.
Exactly. And smart contracts manage all the compliance checks, the repayment flows, the transfer of funds. Everything is transparent. This just radically cuts out the traditional middlemen,
The title companies, trustees, settlement agents.
all of them. And that makes a whole process dramatically faster, cheaper, and instantly transparent. It's a huge competitive advantage over legacy mortgage providers.
Finally, let's look eastward toward the Middle East, which is just rapidly adopting AI and cloud infrastructure. We've got two key tech alliances shaping identity security and intelligence in the region.
And with AI and cloud adoption accelerating so fast, identity security becomes the most critical component. The company 7 opened its new Dubai headquarters and formed a strategic alliance with Starlink.
Who are a major cybersecurity distributor across the Middle East and Africa.
Correct. And the key element here for government and finance is data residency.
It has to be local.
Absolutely. So they are offering a locally hosted identity cloud right there in the UAE. For customers in regulated industries, banking, energy, government meeting local data residency requirements is mandatory.
And the solution helps them comply with those strict regulations while defending against these advanced threats that can exploit, outdated manual access tools.
Exactly. The second major development comes from an alliance between Saffron and the Technology Innovation Institute, or TII. This was announced at the Dubai Air Show.
And they're focused on building the next generation of agentic AI for geospatial intelligence, GEOINT.
This is a major leap beyond current satellite image processing. We need to define agentic AI first, though.
Okay.
It's an AI that can not only process data, but can also autonomously reason, plan, and then take actions to achieve a complex goal.
So how are they applying that autonomy to satellite data?
They've trained a specialized large language model, an LLM, specifically on complex military scenarios. So this new platform doesn't just detect objects in an image. It transforms raw satellite images into decision-ready intelligence.
So an analyst can just ask it a question.
They can ask highly complex strategic questions using natural language, and the agentic AI processes the imagery, the context, potential outcomes, and it delivers actionable insights. It drastically accelerates the entire mission lifecycle.
So let's try and synthesize the massive amount of information we've covered in this deep dive. I mean, the story of digital assets today really seems to be one of accelerating maturity.
It is. It's being driven by this powerful push from both the inside and the outside.
On the outside, you saw the regulatory picture just solidify dramatically, whether it was the US SEC cutting down leverage risk to protect investors,
Or the UK granting crypto the ultimate legal status, recognizing it as legally defined property. And institutionally, you have figures like Fink moving toward long-term acceptance. And then internally on the tech side, networks like Ethereum just got 8 times more scalable with Fusaka.
ensuring a path for future growth.
For sure. Digital assets are moving, and moving definitively, away from just pure speculation toward becoming, well, legally recognized property and foundational global infrastructure.
It's a compelling juxtaposition, isn't it? Almost contradictory. You have institutional leaders like Larry Fink calling Bitcoin an asset of fear, a psychological hedge against risk. But at the same time, the UK is giving it the same clear legal status as physical goods or currency.
Psychological hedge versus recognized property.
So does this conflicting designation actually solidify its future role as a definitive global reserve asset? Something for you to chew on until our next deep dive.